Hi folks, welcome to this special video. We are going to discuss IT sector. Will it crush your wealth? That is the topic. We're going to discuss what is the recent developments in the IT sector and how the IT sector has performed previously to really get a sense of where we are and what potentially can happen. So the story basically, as you all know, is that US has slapped this $100,000 fee on new H1B visa. Of course, there was a confusion on old ones as well. But going forward from 2026, $100,000 will be applicable to the companies which sponsor the H1B visa. It earlier was $1,000 only. So 70% of these visas are taken up by the Indian employees of either US companies deploying Indian manpower there or Indian companies deploying manpower for US companies. So the shock to the IT industry is certainly immediate and imminent. Mid caps getting hit harder than top firms, but nine IT firms in combined lost almost $10 billion in Monday itself, with mid caps seeing the heaviest buildup of open positions of bearish nature. And here you can see the Nifty IT index where the news came in exactly here, and this was almost immediately after a few days of Infosys announcing a huge buyback, which had propped up the entire IT sector. And within 5 days now, the entire propping up has gone to a waste. And we are now nearing the recent lows and possibly going to challenge that bottom. If this August September bottom gets broken down, then perhaps a lot of downside is possible uh, opening up. So the IT sector stocks and the index certainly not looking good, but you know it is not just about this $100,000, but the lottery of H1B visa will now basically favor those with higher qualifications and higher level of jobs. So the lower end will get impacted the most. Already 800,000 applicants used to be there for 85,000 slots every year, and these are all pretty much high skilled roles which are not filled by US local residents. And a anti-immigration rhetoric has sort of started off because of this. Americans basically don't want others to come into their country and take away their jobs. And but the reality is that nearly half of the Fortune 500 companies are founded by immigrants or their children. If we see this list sourced from Mint, the number of visas that are sponsored, H1B visas sponsored in the US, you can see all the top names, whether it is Amazon, whether it is TCS, Microsoft, Meta, Apple, Google, all of them sponsoring thousands of visas because that is the need of the day. And if we see the math behind the H1B numbers, you can see that earlier the top five costs of H1B visa used to be just $1.3 billion. And uh, the new fee, I'm sorry, $1.3 billion is going to be the new fee of the cost if the visas remain then same as before, which used to be just $13 million. So it is a huge hit for the industry if the format remains the same in terms of number of people going there. And the new fee as a percentage of annual profits is about 9.9%. So it's an immediate shave off of about 10% of earnings, and hence the earning per share will drop perhaps somewhere near that figure depending upon how are the numbers going through. So outsourced linked jobs, which are 65% of H1Bs, are mostly at risk. Now, US firms will have to adapt. It will have to pay for top talent because, uh, you know, there are some jobs that can't be offshored. Those they will be willing to pay this 100,000 additional fee. But it also means that they are going to offshore more. So that means more GCCs and R&Ds centers in India, and less reliance on sending people from India to the US. Rather, those folks should stay in India and work at the GCC centers in India. Who are the losers? Indian students, big losers, because not finding jobs in the US may not, have them pay back for their loans that they would take. Entry level coding jobs, etc., will get really badly hit. Winners could be some US universities which set up bases in India, India GCCs, and India domestic tech ecosystem could be a winner. Already, we are seeing a huge amount of drop in US F1 visas, which is the student visa. And just in H1 of 2025, you can see there's a 43% drop in students going from India to the US and 24% from China to the US. So the US universities also are likely to be hit pretty badly due to this. And With national interest quotas and lobbying in play, uncertainty is probably hurting than the Americans more than the rule itself, and it'll basically the time that is going to be spent on this, we'll only come to know of this outcome in maybe 6 months, 1 year, where businesses who will not pay for this may find themselves hurting. The irony, of course, is that US might protect a few jobs for now, but they risk losing a lot of tax dollars. All these people who used to work in the US used to pay top tax dollars to the US itself. For India, people are saying it could be a silver lining, retaining talent, deepening local markets, and accelerating the shift from cost arbitrage to product and R&D leadership. So the bottom line is that the talent is the new oil. Those who will harness it will win, and those who will shut the door will fall behind. There are two camps mainly which has formed. One is very pessimistic camp, and the ones who are basically selling out in the market right now. They say the added cost could dampen U.S. client demand itself. So the market share of uh, work coming from U.S. companies itself may go down, and they say that companies may be forced to rethink their onshore strategy, and Indian IT firms may have to bear that slowdown. The optimistic camp, however, says that Indian IT firms are too entrenched in the US operations for clients to walk away. They can't walk away. The best that they can do is that shift from onshoring to offshoring, move more work to data centers, move more work to back office functions, and strengthen the domestic IT base. So some SWOT analysis also has been done upon on H1B visas. The strength here is that the largest STEM talent pool globally exists with Indians, and we have proven offshore delivery models by our industry. There are 1800 and plus GCCs in India, and they are ready to absorb more work. And rising domestic tech demand cushions the shocks. The weaknesses of, however, very persistently, openly known to everybody that 50% or more reliance is there on US revenues. Fresh grads lose on site pathways, lag in high value product engineering, and risk of perception as loser in visa battles. The opportunities to retain more talent at home, capital shifts into India, rapid expansion of development centers, and move up the value chain of low end jobs to higher end jobs. The threats may be that US may ring fence visas for strategic sectors. So some sectors they may say no, only US citizens can apply here, and protectionism, this wave could spread. Court delays could prolong uncertainty for firms, and risk of domestic talent glut. If supply outpaces demand, the salaries of IT graduates could really fall. So the potential impact on IT firms is seen as 0.5% to 6% in terms of FY27 earnings basis Nomura research. And if you look at it, I mean, it is not such a big impact. Even if one were to assume the assumptions that are there, that most of the larger firms are looking at a 1% impact on earnings per share going forward, and that is not such a huge impact. Uh, IT firms who have come out with the expected impact have all said that there is low impact, low dependency, low number of H1Bs. Some of it may just be to soothe investor nerves, but largely speaking, if all are speaking the same language, I think the market is getting more perturbed than the industry itself. So the question becomes then, should you stay away from the IT sector? We've not had any gain in IT sector for 4 years. So since September 2021, if you see the white line, which is the CNX IT, it has been flatlined for last 4 years, whereas Nifty in the same time period has gained 43%. But there have been periods where IT has really boomed. For instance, just before the dot-com phase, IT went up 192% in 4 years versus Nifty at 18%. And then post that period, there was no basically highs for almost 25 years. So you had a huge bubble for 4 years and then nothingness for 25 years. And then the next rally came. Also, when we compare NASDAQ versus Nifty in dollar terms versus CNX IT in dollar terms, we find that CNX IT, especially since the dot com boom, has trailed the NASDAQ and has trailed Nifty in dollar terms very, very poorly. If we compare CNX IT in dollar terms to Nasdaq, we can find that there was a period from 96 till about 2011 when CNX IT in dollar terms was doing better than Nasdaq. But since the last 14 years, Nasdaq has been performing much better than the CNX IT. So the question is, can you afford to completely ignore a sector? So let's look at some piecewise data as well. So if we see a 3 monthly chart since the last 25 years, and we take a ratio of CNX IT to Nifty, we find that we haven't really gone anywhere since .com on the CNX IT. However, when we see it purely in a segmented format from 2009 to 2015, for instance, CNX IT did really well, 510% versus 241 on Nifty. Then there was another period of 2017 to 2021, the one that is highlighted here. You can see that CNX IT really did well versus Nifty, where we clocked 270% versus Nifty at 95%. So the idea is that you can't really say whether that sector will perform or not perform. What you need to do is to have a strategy which will take you into that sector whenever it starts to perform. So, making long-term portfolio decision just because of this H1B visa is probably a bad decision. You have to ensure that your strategy is ready to capitalize on the moves as in when they come, and when they are not in the move, you have to get out of them. So, just like most momentum strategies probably don't have many or any IT stocks as of now. So, this is how you're going to play the game, by being sector agnostic and by being ready for capturing that opportunity whenever it comes. So let us know in the comments what is your take on the IT industry. If you like this video, you may like this other video on your screen as well. Do keep sending us your feedback. Do like and share this video, and do subscribe to our channel, and I'll see you in the next one. Bye.